Duolingo is touted as a free, fun, and accessible web app and app that students can use to learn different languages. Right now, they have 40 different languages, and they are also pushing into other avenues such as chess and math. So in this video, I want to go through their business model, their user experience from their services and products. I want to see if there's a moat or if a lack thereof. And then I want to go into their Q2 earnings. They recently reported earnings, and I want to see what investors are seeing in this company and stock. And then I want to do something a little different, and I want to look at the news and sentiment around this company. This company has been in the news a lot recently, and the various investors have been taking stakes in and hedging against Duolingo. So I want to see what investors are seeing and saying about this company. And then finally, I want to go through the valuation of this company. I want to see the relative and intrinsic value for this company and whether this is a good investment or is something that we should skip and move on to the next possible investment. So stay with me, stick around. Please like and subscribe and leave your comments below. They really help my channel grow. My channel is super small right now. So those comments, those likes, those subscribes really help me out. So with that, let's get into it. So I first wanted to just show you guys, I'm sure a lot of you are familiar with Duolingo, but I just wanted to show you some of you guys who are not how Duolingo looks. It's a web app plus mobile app, so it's optimized for both. I'm on the desktop right now, so I pulled up Duolingo website and this web app, and this is what it looks like. They really gamified the learning process, the language learning process especially, but they're now moving into other segments like chess, like math, and various other things. And they have a series of products, most of them free. And you might be asking, how are they getting money? How are they making money from free apps? And the answer to that is advertising. So the free apps have advertising on them. Web apps have advertising on them. As you can see, like right here, there's an ad right there on this web page. So the way that they are building this, and this is a common model for a lot of SaaS companies like this, and you can pay to remove ads. So there's tiers above the free version. The first tier above this free version is Super Duolingo. So that removes the ads and adds a few other features, such as unlimited hearts when you're doing your lessons. So each lesson has a number of hearts, which is basically the number of lives. And if you keep getting things wrong, you lose lose hearts as you go along. But Super Duolingo removes that restriction. And there's a few other features and things that they added on to that tier. The next tier after that is called Duolingo Max. And Duolingo Max is utilizing AI to actually hold conversations with the user, with the student in that language. And so everybody kind of knows that language is best learned immersively. So you go to a country, you learn it much faster than just reading about it in a book. So Duolingo has taken that to heart and has introduced and integrated AI into their services. And this is a huge step because AI will help their margins, AI will help their top line revenues, will help their bottom line net income, will help their margins, and just overall better their product. It's already one of the best products for learning languages out there. And I think they're taking the next step in that evolution. And an additional feature that they added to Duolingo Max is the ability to explain why you get an answer wrong. So if you get an answer wrong when you're speaking, doing one of the speech tests, or when you're answering one of the multiple choice or whatever it is, whatever question type it is, if you get that wrong, it will use AI to explain why you got it wrong. I'm super excited to see how that plays out because I use Duolingo from time to time and I like to, catch up on my learning I'm learning Japanese, learning a little bit Chinese now, trying to learn chess because I'm getting into chess. So it's really exciting to see AI being integrated into these products that can help you learn. So this will just help you learn at a much faster clip and probably introduce a better user experience for these students trying to use this. So this is all positive for looking at it as an investor. This is all positive for Duolingo's continued growth, revenue growth, EPS growth, net income growth, margin growth, and just differentiating them from competitors in that space. And last thing I wanted to mention about this is you can really see that they gamified the interface. This is both on mobile app and on web. And you can see that they have like interactive characters that are animated. They spare no expense in the research and development of their products, of the SaaS product. So you can gamify it by having leaderboards, you have quests, you have a shop. You can make your profile, you can compete against your friends. There's leagues in the leaderboard where you can climb every week. They really keep people attached and coming back for more because there's something called streaks. And if you miss a streak, you kind of like lose your momentum. And they have 40 different languages, I believe, at this point. So, and they're adding to this. They recently reported Q2 financials. So I want to go through these numbers as an investor and see where they're stacking up. View all SEC filings and goes to the latest 10Q report. And so here we can go down to financial information and look at the consolidated statement of operations. So this is the income statement. And this is what I like to start with because this is what the operations part of the business. So we always start with top line revenues. They reported 252.265 million compared to 178.327 million. Cost of revenues went up by approximately 20 million. Notice how their revenues have increased a lot more than their cost of revenues. And their gross profits, because of that, have increased a lot as well. You can see a 52 million approximately increase there. And then operating expenses came in at 149.2 million versus 112 million. And that predominantly came from general administrative and a lot from research and development. So that is predictable because you can see how much they are putting into their research and development of their product. They're introducing new languages all the time. They're introducing new avenues of learning. So chess and math didn't exist before. Now they're adding that. And it takes a lot of research and development money to create those products and make them good enough to promote to students worldwide through their app service. So that makes sense. Sales and marketing, they've been pushing out sales up. So it's getting in front of a lot of people. That's gone up a little bit. So yeah, all of these have gone up to increase the total operating expenses. But still the operating expense change is, the nominal change in the operating expenses is less than the revenue, the change in the revenues. So income from operations, taking all those numbers into account, 33.36 million versus 18.7 million. This is going in the right direction. It's almost a doubling of the income from operations. And then we get to net income and comprehensive income coming in at 44.78 million versus 24.35 million. So that is almost a doubling of the net income. The EPS came in at 98 cents versus 56 cents a year. Oh, that's basic EPS. So diluted EPS came in at 91 cents versus 51 cents. 40 cents a share increase over a year. So let's move on to the cash flows. They are reporting 6 months ended June 30th. So this is not the quarterly data, but 6 months of data. Here you can see that 6 months of data is 80 million net income. And then they have adjustments to that to reconcile that net income. So depreciation and amortization. You have stock-based comp. So you can see one thing I don't like is the stock-based comp went up about $14 million roughly. Change in assets and liabilities. This is the net cash that's provided by operating activities has changed a lot. That's changed about 50 million. Cash flows from investing activities is almost unchanged. Cash flows from financing activities went down a little bit, but it's pretty much negligible. So the cash and cash equivalents at the end of the period was up to 978.96 million versus 890.97 million for those 6 months, comparing those 6 month timeframes. And this is pretty incredible because I feel like they have no debt. They have almost no debt and a lot on cash and cash equivalents. So let's look at their balance sheet to confirm that. So we go up to the balance sheet. So total current assets, they have 1.323 billion versus 1.1 billion from this time frame. And total assets, they have 1.542 billion versus 1.301 billion from that time frame ago. And so let's look at that versus their liabilities. So their total liabilities comes in at 565.5 million versus 477 million. So their that's crazy. So their their total assets increased by about 240 million roughly, and their total liabilities increased less than 100 million. So that's a big difference. So it increased 240 million versus an increase in liabilities of less than 100 million. So that's a great difference to see in this stock. That's what I like to see in this stock. And so obviously, as I've explained in videos past, the total liabilities plus the stockholder equity equals the total current assets. Total assets. And so you can see total stockholder equity is 977.031 million versus 824.55 million from the time frame last year. So yeah, they're in an excellent, this is a pretty good balance sheet, I would say. I would say it's a B+ to A- balance sheet. They have a lot more total assets than total liabilities. And you can see that the stockholder equity is growing in the right direction, 824.5 million to 977.03 million. So this is great to see. Okay, so now that we've looked at the business model, the service, the software as a service, and the user experience with it, as well as the Q2 earnings, I want to go into news and sentiment around this company. So a few things stood out to me while I was researching this company and looking at news and sentiment. And the first thing that stood out to me was there seems to be a divergence between learning progress, which is the mission statement of the company, and what the management is placing importance on, the metrics that the management is placing importance on. So it was clear from the earnings transcripts that management is really emphasizing the DAUs, which is the daily active users number for Duolingo, and that has been going up. But what they maybe failed to put enough emphasis on is the monthly active users has been sequentially declining. And so this article really goes into that and takes that apart. So the daily active users over the monthly active users, that ratio is increasing because daily active users is increasing, but also monthly active users is decreasing. So that ratio is going up. But is that really a good indication of learning, or is it just more of daily active use? And investors and Wall Street are valuing that number. But if monthly active users have been sequentially declining, if that continues, then daily active users will eventually get hit. That base is going to erode eventually. And that's what this article goes into. And they note that there is short-term upside in this potential stock. They ran a simple DCF analysis in this article and got $430 per share. But long term, they bring up long-term concerns about the ability of this company to make sure that the monthly active users stay level or rise, and the learning outcomes attached to that or lack thereof. So the next article that I want to go through is this one, which I found in the Wall Street Journal about Duolingo's social media manager leaving their company. And this is, I think, just happened. And one thing about Duolingo that I spoke about in the business model in the business model section, is that Duolingo relies heavily on a excellent marketing campaign. That's one of the prime reasons they had such a great Q1 about the Dead Duolingo Dead Duo marketing campaign. That all comes from a great marketing team. At least in the short term, this is a concern because you want to see really high quality marketing campaigns. Articles go into whether there's a sustainable moat at Duolingo. Is there competition? Is there a barrier to entry into what Duolingo has created over the years? And right now, I think it's getting harder and harder for Duolingo to continue keeping its intellectual property at the top of the game and continue competing with these competitors when AI is out. So the first one I found is that Duolingo crashed. This is a potential reason Duolingo stock crashed 38% after their earnings, is because OpenAI was able to build a language app in minutes. Literally minutes. Anyone can do this. Anyone who has access to AI software like this can build something in literally minutes. So this really drives a question into whether is this unique? At this point, it's getting less and less unique and special, and the moat is kind of eroding away in this company. That's what I'm getting from these articles. The competition can only grow from here, and you don't really need a huge development team to build these things anymore. With AI, you can replace that entire development team and literally shave so much time off of development and pushing this product, testing and pushing this product to live, that there is just no moat for these software companies like this anymore. So here you can see that after OpenAI showed a demo of building a language learning app in minutes, this Duolingo stock dropped immediately, 38%. So where is the moat? Where's the competitive edge? Where's the barrier to entry to get into this industry? It's literally not there anymore. So are you using Duolingo just for the fancy characters and animations, which in the future will probably be replaced as well and competed on as well? Like, there's a lot of competition here and a lot of potential competition. And so that's a real problem that I see in this company and going forward. They're driving huge revenues, lots of revenue growth, 40-ish plus percent revenue growth right now. But I really, really doubt and question what their revenue growth is going to be going forward. I don't think they're going to keep a 40% revenue growth at all in the next few quarters, next few years. I don't think that's going to be sustainable at all in this market climate with AI leading everything. And I know that Duolingo is using AI, and the CEO even said that they're going to make Duolingo an AI first company. But that's really a double-edged sword for Duolingo, because there's so many multi-billion-dollar companies, AI companies, Google, OpenAI, Meta, that can take all of the money, the resources they have, and easily make a competing product to Duolingo. And they've already started doing that. So this is a existential crisis for Duolingo, I think. I don't know how they're going to compete against this. So the second article goes into that, into the more in additional competition that Duolingo is facing at this moment. So Google just launched an AI-powered Duolingo alternative, and it doesn't look terrible. And if they can always continue adding and adapting this to get it better and better. Google has almost infinite resources, can easily put additional resources in to compete against Duolingo. Duolingo is not the size of Google or OpenAI or Meta or any of these other megatech AI companies. So I'm going to bring up the stock in the stock valuation tool. I'm going to put in Duolingo here and pull it up. And I've scrolled down to the comparative company analysis. We're looking at the relative valuation. So the trailing 12-month PE is 141x, and the forward PE ratio is 126.6x. There's no getting around the fact that these are elevated numbers. This is a high growth company, so some elevation is, expected. The forward PE is lower than the trailing 12-month PE, which could indicate that earnings are going to increase over the next few quarters, which would lead to a bigger denominator, bigger earnings EPS number, which would bring down the PE ratio. Let's move on to growth analysis. Here we have EPS growth, trailing 12-month, current year, and next year. And then we also have trailing 12-month revenue growth, current year revenue growth, and next year revenue growth. And so obviously the next year EPS and revenue growths are from analyst estimates. So that's always taken with a grain of salt because it's the future projecting. And so you can see that the trailing 12-month and the current year to date EPS growth are quite high, 120% and around 100%. Next year EPS growth is projected at 27.4%. So that indicates, even though that's an estimate, that indicates the deceleration in the EPS growth. And so no company can sustain high growth in EPS or revenue forever. It's impossible. So at some point, these numbers come down and the multiples come down with it. So, and the analyst estimates. We have to be careful in where we put our investment dollars in case these are at the top of the cliff and then it's coming down. It's possible that it's coming down right now. So the multiples may drop. So current year revenue or trailing 12-month revenue is at 40%, which is indicated in the earnings and the earnings transcripts as well. And then current year revenue growth is around the same. And then next year revenue growth is much lower at 26.3%. So then we have margin analysis. The trailing 12-month gross margin is really good at 72%, which is pretty high. And that you see that often in these type of SaaS companies without a lot of overhead, without a lot of physical assets and physical hardware and data centers to like maintain and manage. You'll see that their gross margins are very high. And then trailing 12-month net profit margin is 13.2%. On to intrinsic value, lastly. And here I've changed it up so there's a bear, base, and bull cases. And you can change the growth rates for multiple years or the free cash flow to equity directly for multiple years. So since the growth rate is around 40% right now, and I'm anticipating growth rate deceleration into future coming quarters and years, I'm using 35% for the bull case, 30% for the base case, and 20% for the base case, or for the bear case. And so I use 400, 500, and 600 for the free cash flow to equity. And the discount rate will be the same in all situations. So that gives us a 251, 354, and 451 fair values for each of those cases respectively. So based on these numbers, I'm going to hold off buying any shares in the public account. I think there is potential downsides to this right now based on the news, the sentiments, the valuation, the relative valuation, and the valuation from the fair value perspective. So I'm going to hold off on buying these shares until maybe there's a big drop in the market and these shares are even under 300. Then I might look at this and then reevaluate the company and the stock price, and then see if it's a worthwhile investment at that point. So thanks guys for sticking with me to the end of this video. This was a long video, but I wanted to do a deep analysis on Duolingo because I was actually looking at this as an investment. But based on all of the things I've looked at, I decided to not get in at the moment. But if there's a better favorable price point in the future when the stock market drops, I will be looking at it again. So if you like this content, please like and subscribe and let me know what your comments are below. And until the next one.